On the business desk at this hour, we turn our attention to the expected consumer inflation data, and that's as analysts are not optimistic. The latest figures come as analysts are forecasting a new record high after the previous data breached the Reserve Bank's 3 to 6% target range. Economist at ABSA Miyelani Maluleke joins us for this conversation. Thank you so much for your time, Miyelani. I heard a shocking figure that we could rise with CPI to about 7% this time around. What's your expectation?
Our expectation is that the number is going to come out at 7.2%. It's been a very long time indeed since we saw not just inflation above the upper end of the South African Reserve Bank's 3 to 6 target band, but since the last time we saw inflation above 7% over a bit over 5 years. So there's definitely a lot of inflationary pressures that we have been seeing in the economy. I think speak to any South African, they will tell you that for any given amount of money they're getting into grocery stores, their plastic bags are getting lighter. Speak to anybody going to the pumps, even filling up a medium-sized family car. It's become really, really expensive. So in a way, the numbers that we're going to see today sure are going to be high, we believe, but they really are a reflection of the cost of living pressures that a lot of South Africans are feeling.
Absolutely. An inflation figure of above 7% is a scary thought, Miyelani. What does it mean really, especially as we are on the eve of the outcomes of the MPC meeting? We know that they are likely to hike rates by another 50 basis points, but there's also talk of an even bigger increase this time around.
I think that's a really big question, really, that we know that the South African Reserve Bank's mandate is to look at inflation and to try make sure that this inflation that we're seeing does not become entrenched. We don't see inflation expectations ticking higher and we end up with an inflation spiral. So when you have inflation outcomes that are above the target range, when you have inflation above 7, as we expect it will be, and it also looks like it will be in the months to come, I think in that sort of space, we're going to see the South African Reserve Bank react with monetary policy tightening. They have been doing quite a bit of tightening already. They've been hiking since the November MPC meeting last year. The expectation is certainly that we're going to see another interest rate increase tomorrow. We think 50 basis points. Market consensus is saying 50 basis points, but it's a very small risk, that the hiking is a little bit more than that, a 75 basis point. But I think the key thing to me is that even if we get 50 basis points at the MPC meeting tomorrow, it would not be the last interest rate hike that we're going to see in this cycle.
Absolutely not, because that hiking cycle is expected to continue throughout the next couple of meetings of the Monetary Policy Committee. But that said, Miyelani, what type of economic picture does it paint, particularly the outlook and the effects on the South African consumer? Because the question that we usually get is how does inflation targeting and as well as the raising of rates as monetary policy then counter the negative economic impact?
Well, that's right. Look, I think we need to appreciate that monetary policy works via dampening demand a little bit. So there is no running away from the fact that interest rate increases are going to reduce domestic demand in the economy and to some degree also dampen economic growth. But that is necessary for countering a potential inflation spiral that could become even more growth negative over a longer period. And I think what we also need to appreciate here is that high inflation environments tend to hurt lower income groups a lot more than they do higher income groups. And I think this is why the SARB always argues that it's really necessary to get, I mean, of course not always sufficient, but it's really necessary to get inflation and inflation expectations anchored, I think for an economy to sort of operate really well, and I think to sort of set a foundation in which economic activity can do a little bit better. Of course, I think it's very difficult for them right now to make this balancing act because you already have other factors that are dampening economic growth. We've seen the impact of load shedding on economic activity. It does look like second quarter GDP actually contracted if we look at some of the high-frequency numbers that we've seen so far. We've also seen that the labor market recovery out of COVID has not been particularly strong, so we're still down 1.5 million jobs. I mean, if you compare with where we were before COVID. So it's not a great environment, I think, for the SARB to be making this balancing act, but I think it is clear that getting inflation lower or getting inflation expectations, I think, anchored is the key priority for the South African Reserve Bank right now. And even though it does dampen growth in the short term, over the longer term, delivering that low inflation environment is actually growth positive.
Thank you so much for your insights. Economist at ABSA Miyelani Maluleke this morning talking to us ahead of that CPI print expected from Stats SA. They are expecting a hike to 7.2%. The CPI in South Africa has already breached the Reserve Bank's target range of between 3 to 6%. And what we are then awaiting is the outcomes of the Reserve Bank's Monetary Policy Committee meeting. That's tomorrow. The expectation there is a 50 basis point increase, at the most a 75 basis point increase.